Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of Thanksgiving, November 21st through the 25th, title of which Thankful to Make Money Trading. So we'll talk about all the things we're thankful for about being able to make money trading, and we'll ask you to also share some of the reasons you may be thankful to be able to trade and hopefully make money trading. So again, in part one, we'll go through our market analysis, look at the markets from last week, and then we'll talk about strategies. We'll talk about trading during the week of Thanksgiving, Black Friday, Cyber Monday, holiday weeks, etc. And we'll come up with our strategies for trading during Thanksgiving week, again, November 21st through 25th. And then tomorrow, same time in part two, we'll apply all that market analysis, all those strategies to pick our individual stocks to put on our watch lists and our bullpen and our shopping list for trading for next week during Thanksgiving week. So thank you to everyone that's joining us in the live chat for the live stream. Spacula, the Ricky Khan, David Spielfogel, Walter Lyons, Nug M. Glad to see you all. Thank you for joining us. So we'll go ahead and get started. So here's our Google document with our notes for part one of our weekly trading game plan. Again, this is publicly accessible. You can find a link to this Google document in the description box below. And we store these in a public Google Drive folder where you can find also the documents for our previous weekly trading game plan. So it has links to some bonus videos, the tools that we use, any additional references, etc. So we'll go through our notes. Again, the title of today's part one is Thankful to Make Money Trading. And again, we'll talk about all the things we're thankful about at the end of the video, being able to make money trading. As a bonus video, I did a separate video on how to make money trading during Thanksgiving week. Talks about Thanksgiving week, trading during Thanksgiving week, trading during Black Friday, Cyber Monday, some of the sectors, industries, and individual types of stocks that you may want to look at trading during Thanksgiving weeks. Black Friday, Cyber Monday, etc. So again, as a bonus for watching part one of our weekly trading game plan for Thanksgiving week, you can access that video via this link in our notes. So again, it's goes through in more detail all about trading during Thanksgiving week. So I didn't want to consume everyone's time going over that in detail. You can view that at your leisure. So I hope that all helps. So now we'll just jump right into our analysis from the markets for last week. We'll jump over to FinViz, homepage of FinViz. We'll see how the markets ended up on Friday. So we see, it's the whole week was kind of choppy. You see the markets did end up just slightly green on Friday. Advanced decline was pretty split, more new lows than new highs. We still got a majority, 66% above their 50-day moving average, 33 below, but a majority are still below their 200-day. In fact, it's just inverted. 66 are below their 200-day, 33% above, but you can see they're interpreting that as being bullish. See, most things were green except for some of the FANG stocks, Google, Amazon, Tesla. We saw sector rotation out of energy. Again, we'll talk about the sector rotations that we're seeing and some opportunities, some strategies to make money based on those sector rotations. Again, we've been talking about this for quite a while. See some of the news, SBF, FTX. We'll talk about that again when we get to strategies a little bit. Just reference it. Very risky for the U.S. to aim, tearing China down. World Cup. S&P ends higher, led by defensive. So we also saw oil bounced back, but there was a major decline, and we'll see that when we get to the futures. That oil, I think it went down to 77, maybe even 76. And again, we'll talk probably in more detail tomorrow about how we're going to play that decline in oil. Natural gas has been pretty choppy as usual between low fives and seven. Gold was up a bit and then declined a little bit. We see all the futures are up just a little bit. Again, the dollar had weakened, and then so euro is above parity now. Again, the pound strengthened a little bit, and we saw this, decline in treasuries, which allowed the tech stocks to run at times during the week. You can see the 10 years now below 4, 30 years below 4, still, pretty inverted. And again, we've been talking for a while with the Fed raising interest rates. Anything, below 4, 4.5 is eventually they're going to have to go up. So that was, just how the market played it, but eventually Treasury yields are going to have to go up due to the Fed raising interest rates. And we'll talk as some of the economic data that kind of triggered that decline in yields and some of the runs in the markets last week. So let me throw up the banner. It says, none of this is financial advice. We're not financial advisors. This is educational and entertainment only. And then we'll jump in. We'll look at the indices. Look at the SPY first. So again, we saw, a low, a lot of chop. It did get above its 50-day moving average, chopped around, still below its 200-day moving average. We still see it's in a declining channel. So if we zoom out to the weekly, again, we can see, it still looks like it's in a bear market. We're making lower lows. We can't really tell if that was the bottom or not. It did, again, break above its 50-week moving average, still well below its 200, and looks like kind of a doji on Friday. So the doji candle is an uncertainty. So whether it's going to go up or down, it's uncertain at this point. And again, we have no evidence to say we're out of the bear market. We're making lower lows, lower highs. That says, we're still in a bear market. But again, like last week, we talked about that. I think, in my personal opinion, I think the bear is generally in hibernation for the rest of the end of the year, except if somebody pokes the bear. And we saw that Poland news did kind of poke the bear, and we saw some increase in volatility and some negative reaction in the markets when that came out. Then they settled back out, and things went back up. So we see that, So we'll look at the Qs. Pretty much the same, lower lows. Can't really tell if that's a bottom. Got another doji, although the Qs is still below its 50-week moving average. So it's, it's going to encounter resistance there. Again, no indication that we're out of a bear market yet. Dow has been performing better. So yeah, we see, last week we saw it bounced off of its 50-week moving average. Now it's broken out above its 200-week. It's, possible tests that previous high. There's going to probably be some resistance at that point. But if it does break above that, the Dow may break out of the bear market in terms of the Dow. It has been performing better. I apologize if you're hearing my little boy. He's some of you have been around a while. He tends to get sometimes boisterous while I'm doing videos, and so if you hear him in the background, that's one of our cats, part of our BeachBum trading family, and he likes to voice be on video. So here's the Russell. Again, the Russell's just kind of hovering between its moving averages. It's it's sitting between its 50-week and its 200-week. Hasn't really broken out. Got another doji. So a lot of uncertainty in terms of where the Russell's going to go, where the small cap's going to go. Look at the VIX real quick. And again, the VIX has generally been in decline, retracing, reverting to its mean. We got that one pop on the Poland news, and then it, very quickly resumed reverting to its mean. So the VIX is still declining. We'll talk more when we get to the futures, and also in part two of ways we're playing the VIX going into the next Fed meeting, Fed interest rate decision through the end of the year, etc. Some potential opportunities there. So. Yeah, I'll look at the VTI again. VTI's total market index. I kind of like looking at that as well because it's a broad range, like 4,000 stocks. So it encompasses a lot of the S&P, NASDAQ, Dow, etc. So it had, it's been very choppy. Did break out of its 50-day moving average. Got resistance up there. So it's above. We had a actual golden cross on the VTI, so that's kind of positive for the markets overall. So again, it's above its 50-week. Got another doji. So again, going into next week with all the indices, there's a lot of uncertainty, right? We see it in all the indices. They're all dojied on the week, so uncertainty could go up or down. But again, it's well below its 200-week moving average. So let me grab a drink and we'll look at groups, industries, etc. Okay, so here's the groups tab with the sectors on FinViz. Very useful for seeing sector rotation. Again, if you've been around for a couple weeks, last week I think utilities was at the bottom, energy was at the top, and now energy's at the bottom and utilities at the top on Friday. So you see how they're rotating. They're taking the underperformer, putting money in, taking profits out of the outperformer. And again, rotating money into the underperformers. So again, consumer defensive, healthcare, utilities, they were underperforming. Now they're overperforming. Basic materials, energy have been the top performers, and now they took profits in those, and now they're at the bottom. So again, this has been going on for some time. I would expect these sectors to get inflows of money sometime, next week. So when you start to see these sectors get money flow, there's an opportunity there. I would again expect those have been the outperformers for the months. We see basic materials. You see energies drop down a little bit. So again, for the month, energy, basic materials have been stronger over the quarter. Financials as well. So we watch this, and again, every day you can look at the bottom sectors and kind of wait for them to start pouring money into those to rotate them to the top, take profits to the top, and watch those rotate to the bottom. So same thing on an industry basis. So on Friday, we saw things like hotels, insurance, a lot of utilities. Again, the utility sector got, a break. It had been underperforming. So now they're all at the top. And if we go to the bottom, we see some materials, steel. They've been rotating in and out of solar. So again, every other day or so, they run solar. So it's either top or the bottom. Then they take profits. It drops to the bottom. Here's some oil and gas. So some of the energies dropped down. Again, we saw oil decline. Really no real news as to why oil dropped on, I think it was Friday. Yeah, it was Friday. So again, I would expect coal, we've seen coal be at the top. Now it's at the bottom. So again, I wouldn't be at all surprised if money starts pouring into some of these coal names again. And, we see for the week, solar was at the top. So, but Friday was low. So they're pulling money out. So solar is probably going to drop back down, I would expect. So again, I look at these at the end of every day, and we see silver. Silver had a nice run. Uranium's down. That's another one they rotate in and out of. Some opportunities there. Gold's down right now, so again, plenty of opportunities. Even if the market remains pretty choppy, flat, there's plenty of opportunities in individual sectors. And again, I've showed you in a couple videos how, and we have a standalone video how you can click on any of these, see the individual stocks, pick one out that's got a good technical setup or that you like, that's profitable, etc., and then wait for them to start flowing money into that sector. So if there's anything somebody wants to look at specifically, please let me know. I will try to keep an eye on the chat. So again, we have other videos how to use all the various tabs of FinViz. So I'll go through the highlights of the economic data, and then we'll jump over to investing.com. I'll let that guy come up while we go through the events of last week. There wasn't much on Monday. Tuesday, we got PPI data. So that's a producer price index. That's leading the front end of the supply chain for inflation, and it was down below expectations just a little bit, 6.7 versus 7.2, and of course, and it's still 8 year on year, and producer price inflation still 8%, but it was a little below expectations. So the market, got exuberant over that and started running things up, like running tech up, etc., saying, well, inflation was less than expected, but it's still 8%. So again, the market's not always terribly rational, but you see here's some headlines, and you can click on these and read these articles I pulled out at the time. NASDAQ soars as softer inflation data boosts bulls. So again, they react every time they get a little bit of a hint that inflation may be abating. The market goes nuts, and they run tech and growth and Cathie Wood's ARK, and so now what how it behaves, how it reacts. So easing inflation, but it's still 8%. So manufacturing, again, these are indicators of a recession. It's below expectations. So production, manufacturing, negative. Inventories were down. That's a little positive, but again, that's companies preparing for a recession. Housing markets in recession, still declining. Crude oil inventories were very negative. Now, normally you would expect that to drive oil prices up, and it may have at that time. But then we saw the end of the week, oil prices really crashed down below 80. And gasoline inventories are up. Mortgages came down a little bit, but still very high. So it's still, people aren't going to be buying homes. Retail sales was actually pretty good. So again, that tells you that in October, the economy is still relatively resilient. Some people think that may have been a little bit of a blip. So see, retail data dims pivot hope. So again, because the economy is resilient, there's no reason for the Fed to pivot. We've been saying, they keep telling the Fed people, there were a bunch of Fed presidents came out this week, and they keep telling you higher for longer, no pivot. Market's not necessarily listening, but that's what we're expecting. Again, not financial advice, but we've been saying for a long time, we don't expect them to pivot. They're going to keep raising rates for the foreseeable future. Then again, you saw some companies are reporting decent earnings, and others are missing, and they're getting killed. So Target got killed, bad earnings, they mismanaged their inventory. So yeah, well, that's fine if you're up late, Flippa. Thank you for joining us, Flippa the Ship, in the live chat. Glad to see you. Glad you joined us. So again, building. It's okay, but again, we know housing starts was okay, but we know the housing market's in recession. But we'll talk about we're looking at a play in the housing industry. We'll talk about that in more detail tomorrow. Initial jobless claims was lower than expected, but you see that the 4 week average and the continuing was higher than expected. So again, that's fuel that says, okay, unemployment's not bad, so the Fed can keep raising interest rates. They don't have to worry about uh, unemployment spiking up. So again, it's fuel for them to keep raising interest rates. And we saw natural gas storage was up. Again, you would expect that to decrease natural gas prices, but it's really just volatile chopping right now. It's not really people aren't watching the oil and natural gas inventory data very much in terms of the market reaction to the price lately, is my opinion, and what I'm observing. So then Friday we had OPEX date. So before I jump over to investing.com, just a reminder, Thursday is Thanksgiving in the US, so the markets are closed all day Thursday. Um, the day after Thanksgiving is Black Friday, Friday the 25th. The markets close at 1 p.m. Eastern on Friday, so it'll be open in the morning, 1 p.m. Eastern, the market will close. So Walter Lyons asks in the chat, has the market always been so emotional about interest rates? I know it has been for some time, but I guess I just don't know if it was before I came to the party. Well, Walter, we haven't had really rising interest rates in decades. Um, I'd have to go back into history to figure out when interest rates were this high. We did see this. Powell started raising rates, if you remember. I think it was 2018, and Trump came out. He didn't like it because it impacted the markets, and essentially he kind of pressured Powell, I think, into stopping raising interest rates, and then we had the pandemic. So that kind of put a kibosh on that whole thing. So you have to go back into quite a while back into history to see an era where we were had interest rates rising at the rate that we're seeing. And you heard these 0.75 interest rate increases in sequence is pretty historically high. I don't know. You'd have to maybe go back to the 70s with Volcker. And yeah, I remember the 70s. I remember the 80s. I was around. I wasn't trading in the 70s. I'm not that old. But yeah, we haven't seen this. So most of your traders have never seen an environment like this, and so it's not terribly surprising that they're reacting. I I guess I'll say irrationally. Um, Maybe that's an overstatement, but again, most of the traders haven't seen an environment like this. So yeah, I think they're reacting a little irrationally due to these interest rate increases, and then oh, maybe they won't go as fast, so then they get overly exuberant, and the market jumps up, and then you know, so the volatility. So I hope that helps. So I'll just quickly whip through this week, see if we see anything else that happened that was notable. I talked about PPI, talked about retail sales, inventories, oil and gas, talked about unemployment, jobless claims. Friday, existing home sales down, and not surprising because you can't sell your house if you have to pay 7% mortgage to get a new one. So again, that's going to put the housing market in recession. We see Baker Hughes rig count's been slowly creeping up for quite a while, but again, the market's not really paying much attention to that. So see what's on deck. Not much on Monday, typical. Tuesday, get the Fed minutes, red book. manufacturing. Again, you got Fed members coming out and speaking, and some of them are more dovish. Some are Bullard's very hawkish. He was talking about 7% Fed interest rates, and he's you have to understand who's speaking, what their tendency is. Brainerd, I think, is a little more dovish. I know Bullard's very hawkish, so. Mester, I think, is pretty hawkish. So you're going to keep hearing, a difference of, do they go 0.5? Do they go 1? Bullard's like, hey, we got to go to 7. So again, the consistent message is interest rates are going to keep going up, higher for longer. They have to kill inflation. The economy and unemployment are resilient. So they're going to keep hiking rates until they get inflation down, and they keep saying down to 2%. So you could see how minimally inflation's going down, given that they've raised it up to, what is it, 350, 375 right now. So, they're going to really have to raise it to get inflation down to 2%. Again, like I talked about last week, I think they're going to have to raise their inflation target. I don't think they'll ever get it down to 2% anytime soon. So they're going to have to come up. But once they see it roll over and get under control, then we can talk about some kind of, just stabilization, not even a pivot, just kind of stabilization of the interest rate. So again, not financial advice, just my opinion, but I hope it helps you, make money trading. So that's what we're here for. So then Friday we get jobless claims data, typical durable goods orders. Again, that'll tell us how the recession's doing, and then we get sentiment. Now, well, the last sentiment that came out was actually kind of down. So the consumer sentiment is turning negative again, and it's actually, I think someone pointed out, it's worse than it was during the financial crisis, 2008. So the consumer's starting to really get negative. And that sentiment will eventually curb spending. But again, I don't expect that to happen until after the holidays. I think they're going to spend every penny they can get their hands on through the holidays, due to being cooped up, not being able to do things, go travel, experience things during the pandemic. So again, I think they're going to spend every dime they can get their hands on through the holidays, and then the bills are going to come in. And they're going to say, "Oh crud," you know. So again, my opinion. So then we've got, again, Thursday's the holiday. Markets are closed all day. Friday, markets are open early close at 1 p.m. Eastern time. So and again, in that video about trading during Thanksgiving week, you'll hear some of my recommendations about both trading during the holiday Thanksgiving week, as well as what I hope that you take the opportunity with some downtime to spend it with your families, recharge, relax, and then we'll go gangbusters again on Cyber Monday through the start of the Christmas holidays. And again, we'll talk in the future about Santa Rally and all that, and tax loss harvesting, tax loss selling, all that's coming up. Also, the next FOMC meeting is the 13th and 14th, so we'll prepare for that. Should have left that open. Still look at earnings calendar there. So again, still got quite a bit of earnings coming up. I'll let you peruse that. We got Zoom, we got some tech, Agilent, again, some auto, again, quite a bit of earnings still going on. And, if they miss or give poor guidance, they're going to be punished. If they do really well, they might be rewarded. So watch what sectors, what stocks are reporting, what times they're reporting, and maybe opportunities for irrational reactions. We got Disney on an irrational reaction to their earnings, made some money there. It's always good to hear, okay, an irrational reaction, and there's an opportunity to make money there. So again, I'll let you peruse that in more detail at your leisure. Let me grab a drink. I'll bring up the Weeble. Okay, so there's the market screen in Webull. Welcome, Tanavir. Glad to see you. I see you're asking, should I go short on TLT? When we get to futures, let's look at the treasuries and I'll answer that question, okay? So again, here's the market screen in Webull. Again, if you're not already using Webull, it's our favorite trading platform. They're still offering 12 free stocks if you open and fund a new account. As you'll see, we use it for market analysis, due diligence. We do the vast majority of our trading using Webull. They offer trading from 4 a.m. to 8 p.m. and I typically get up at or before 4 a.m. to try to take advantage of any irrational reactions, rebalancing opportunities, etc. In by using Webull at 4 a.m. So if you open an account, you get 2 free stocks, each valued up to $300. If you deposit any amount, a penny, you can get up to 10 more free stocks valued up to $3,000 each. So again, if you're not already using Webull, it's our favorite trading platform. Again, you can trade from 4 a.m. to 8 p.m. and there's some significant edge to being able to trade those hours. You can trade options. We're starting to trade some additional option strategies, including using Webull as well. So we'll talk about that probably more tomorrow as well. So again, if you're not using Webull, why not open an account, get your 12 free stocks? If you don't like using the platform, you can cash them out, take the cash, and use whatever other platform you want. You can find the link to Webull in the description box below. It's also on many of our pages. So, and I'll throw the link up in the chat as well. Okay, so if we look at the market screen for Friday, we see we had more decliners than advancers, but more advancers than decliners, but the percentage of advance was very small. So again, it's pretty neutral, just choppy. Again, Friday was OPEX week, so you get this tug of war, a lot of chop. So not a real strong direction. Although we do see the outflow from the NYSE this week was less than the NASDAQ. So we saw more of an outflow out of the NASDAQ. So that says, tech fell out of favor at the end of the week. So again, another nice place to see earnings is in this calendar on the markets tab in Webull. Again, you can see what's upcoming in the near term, whether it's after market, before market, etc. So I like to use that to see what's coming up soon. So I find that helpful. Look at the best performing industries for the week. So VVX, government activity, education, natural gas. So that was positive for the week. Utilities, we saw they ran utilities this week. Defense was pretty neutral. Everything else pretty insurance neutral. Packaging a little positive. Beverages a little positive. Again, utilities, and renewable. That solar we saw was a little positive. Look at the ETFs. We'll see the direction of the indices. So up on the Dow, bull on the S&P. So up on the S&P, mid cap up. Mid cap, so it looks like they're looking at some mid caps, a little bit of small cap. So they might be rotating out of, we saw the FANGs, Google, etc. We're down a bit on Friday. You might see some rotation as well. In addition to industries, we might start to see some rotation down from the mega caps, large caps into mid caps, small caps. So that's something to keep an eye on. There may be some opportunity there as well. So short euro, short the VIX. So the VIX is retracing, so it's going down. So SPXY is going up. So we got up on the Russell small cap. So again, I'm seeing some indications that maybe they're rotating out of mega cap, large cap, and into mid cap, small cap. So again, that's another area. There may be some opportunities. Industries, industrial, so that's going to be heavy Dow. Dow's been outperforming. Utilities we saw. Healthcare we saw they rotated into. Again, that's a sector they've been rotating in and out of. Energy was down. Again, they rotated out of energy. Basic materials, again, that's one they've been rotating in and out of. Consumer cyclical, they rotated into, but again, that's just a sector rotation. Defensives is going into a recession. That's where, the ongoing strength is going to be, and we see how strong defensives is. Real estate was positive. Again, they've been rotating in and out of real estate. It gets beaten down, and then they rotate into it. Financial services, same way. If financial services is going to be up because of rising interest rates, but then when it gets too high, then you'll see some profit taking. And again, tomorrow we'll talk about how we're playing some potential opportunities in a top in the financial services area. Commodities, so elements. Sugar was running. I was looking for a way to short sugar. I'll show you that in the futures. I couldn't find one. Lead, nickel. Again, sugar, lead, nickel. Softs is like cotton and things like that. We'll see. And again, the futures. And then coffee took a dump. That was kind of interesting. Maybe it's time to buy a bunch of coffee now. It was pretty high, so. Okay, 7 to 10 is positive, 3 to 7 is positive. Again, we're seeing this inverted yield curve, so the short end is very positive. We saw Asia, the Chinese stocks, yen ran up, potential reopening. The Biden talks with Xi were perceived positively. So again, we see the yuan, Chinese yuan. British pound recovered. They were stabilizing their government and their approach in Britain. So okay, so let's look at the futures. Let me see if there's any questions. I know we've got to look at treasuries for Tanvir. Okay, so here's the futures right now. Again, pretty flat recently. You see the Dow's got a little bit of a blip. We see S&P pretty much declined. Then Friday was a nice, little blip up. But again, it looks, topped and rolled over. Remember last week we talked, we didn't know if we were going to get 2 or 3 up days because we had this exaggerated move. Looks like we got 2, then a retrace, consolidation, rollover down. So both the S&P and NASDAQ, same way. 2 up, retrace, consolidation. Now it looks like it's turning down. Russell, same. It had a little bit of a capitulation type bottom there, tweezer potentially. So maybe it's going to turn up. See the retracement reversion in the VIX, we talked about that. It should continue to go down unless somebody pokes the bear and gives it some kind of reason to spike back up. But even then, it has a tendency to drop down pretty quick again. So here's this big drop off in oil. So we saw, on Friday, oil again. I didn't see a triggering event other than recession, lower demand, etc. But it really plummeted down from 85, broke down into the, below 80, and now it's sitting below 80. Now 80 is acting as some level of resistance. So right now oil's just at 80. So, and the VIX right now is sitting at 23.12. So it's again continuing to decline. Natural gas is just chop right now between, high fives, low sevens of resistance. Again, plenty of ways to make money on this chop because you can see it's red, green, red, green. So to play natural gas, you probably heard us over and over. It's boiled to long, cold, KOLD to short. Oil shorting is drip or SCO, and longing is gush or UCO. But again, you see this precipitous drop off. So gold looks like it rolled over. So, there's potential downside in gold. Same thing with silver. All these guys look like it kind of topped and rolled over. So, they're going to have to find a bottom. There probably is, a support level at this previous high. And then we'll see if they bounce off of that or break through that resist. Same thing with copper. See all the commodities. So there's that crazy run in sugar. I was looking for a way to short sugar. You see it dropped off nicely right after that. Again, I don't have an ETF I can short sugar, but that looked like a juicy opportunity, and it was, but I couldn't play it. You see coffee got down. Okay, so here's the treasuries. So TLT is 20-year plus, and we're currently long TMF, which is a leveraged ETF. Same thing, 20-year plus bonds. So they're kind of in between here. You see it kind of peaked and rolled down. And you were asking, Tanvir was asking, should I short? If you're talking very short term, okay, we see, it did kind of peak and go down, and yields do need to go up. So if you watch that closely, there may be an opportunity. Now, I longer term swing wise, I'm not going to try to short the treasuries, but again, shorter term, yeah, it does look like they're rolling over. We know yields have to go up, so prices are going to come down. So it may be an opportunity if you want to pursue that. That's, again, my opinion. That's what it looks like. They did peak and roll over, and we know yields have to go up in the fours. Now, exactly when is that going to happen? I can't predict, but you can watch it when it starts to happen. There's probably an opportunity there. There are some ETFs you can go long on yield, and we can look at those again tomorrow. So you could long one of those ETFs to go short on price, long on yield as well. And we'll look at what the risk reward profile looks like. I know I didn't see anything that stood out as being attractive. And we see this, major decline in the dollar, which fueled the previous pop in the commodities, all the dollar denominated commodities, and again allowed the market to rally. See the euro looks like it peaked, rolled over. Looks like the dollar bottomed and turned up. So we can kind of expect possibly a re-strengthening to some degree in the dollar, roll over in the euro to some degree. So okay, so I hope that all helps. Okay, let me grab a drink, and then we'll talk about all the reasons we are thankful to make money trading, and you all can think about reasons why you're thankful for your trading opportunities, thankful to make money trading, and hopefully you will share those with our community as well. So let me grab a drink, and then I'll go into that in more detail. Okay, so I want to express our thankfulness, say thank you to everyone in our BeachBum trading community, especially to our patrons for all of your support. And let me give a particular shout out to some of our long-term patrons, our long-term BeachBum trading community members, Spacula, Walter Lyons, aka Solidago, um, Also Arthur Duncan's been very helpful recently. So thank you again. I'm sure I'm missing people, but we are very thankful for all of your support, for helping us grow the community. Um, for the mutual benefit of all of our fellow Beach Bum traders. So we want to say thank you, express our thankfulness for all of you, and we hope that you will continue to help us grow the Beach Bum trading community for the benefit of all of our fellow Beach Bum traders. So we're thankful to be able to make money trading, and for the financial independence that's afforded us. So I am very thankful to be able to live and enjoy the beach bum lifestyle. I get to enjoy the beach, or do essentially trading has allowed us to do what we want, when we want, where we want, and you can't beat it. So again, if I want to go take a walk on the beach, I do. If I want to go take a nap on the beach, I do. If we want to go travel somewhere, we can. Uh, Travel costs are a little high right now. We're not happy about that, but again, we're very thankful for being able to trade, for the independence and the lifestyle that has afforded us, and we hope that trading is affording you the opportunity to have a independence and enjoy the lifestyle that you wish. If you're not there yet, where you can be financially independent. Our goal with this whole channel was to share our experiences, our knowledge, to help you enjoy the lifestyle that you want, achieve financial independence. It is my personal opinion that should be uh, people's first objective, because once you achieve financial independence, essentially you can do whatever you want. Whenever you want, from wherever you want, and essentially you don't have to do things you don't want to. So again, something I'd like to talk to the younger generations, and I won't go into that whole soapbox right now. But achieve financial. Your people's goal should be achieve financial independence first. Then you can do whatever you want. And if trading affords you the opportunity to achieve that, great. If there's some other way you can achieve financial independence, go for it. That'd be great. So again, I hope all of our other fellow Beach Bum trading community, fellow Beach Bum traders will also share what you're thankful for relative to your trading. You can do so in our free Discord. You'll find a link to our Discord in the description box below. You can also find it in our um, in the description box, also in the links section of our homepage, beachbumtrading.com, bum without the U. You can find all of our social media sites, the link to our Discord, our Facebook group, etc. So, and also all the platforms, tools we use, references, etc., all on our homepage, beachbumtrading.com, bum without the U. And then again, our Discord's free to join, and the main channel is the beach party here, so you can join and let us know what are you thankful for relative to your trading. I think it would be beneficial for other traders to also hear, what you've been able to achieve through your trading, and then also, are there other ways that we can help you succeed in your trading career, achieve the financial independence and the type of lifestyle, whether it be a beach bum lifestyle or whatever kind of lifestyle you wish to achieve. Let us know how we can help you achieve that. So that's my soapbox on thankful to make money trading. Again, I know we've met a lot of other traders or other YouTubers that we are thankful for their support, their assistance. I won't name them here just out of time. Maybe we'll get to post some Twitter posts this week to let everyone know how thankful we are for all their help. So I can wrap this up without too much longer. Last week we talked about don't get hurt from the FTX bankruptcy fallout. I went through the details of that diatribe. I snipped out that discussion out of last week's BeachBum Trading Game Plan Part 1. And this is our first attempt at a short in YouTube, so you can go see that short. Again, it's what we talked about last week. But if you happen to miss that, you can just watch the short talking about the FTX bankruptcy fallout and my opinion as to how you should not get hurt from that FTX bankruptcy fallout. So I won't go into the details on that. Um, just another interesting observation, and we can kind of see this if I go to the FinBiz. I don't think Friday it was as noticeable on other days, but if I go to the home page, I've been noticing there's, see, right around 2 p.m., I've been noticing market reversals. It's like they're flipping an algorithm on at 2 p.m. and it's switching the direction. So it used to be 10:30, used to be a reversal time. Nowadays, it also looks like there's a 2 p.m. Algo switch on reversal time. So keep an eye on that. Um, Again, I'm going to keep watching that and see if that's a recurring theme. But look for reversals. Again, 10:30 used to be one. 2 p.m. looks like there's one. 3:30-ish tends to be one. I'm usually not around after 2. I'm often out of trading. Uh, could be afternoon, 1, 2. I'm typically not around later in the afternoon in terms of trading. I do most of my trading at 4 a.m. by 10:30, 11. Typically, I'm pretty much done with my trading. So then we talked about how to make money in November during the election years with rising interest rates. So you can listen to all those videos as well. So let me see if we have any additional questions in the chat. I can field a couple and then we'll try to wrap up. If you have further questions, if you have any stocks you'd like me to look at in particular for part 2 of our weekly trading game plan, please post them in our Discord. Again, free to join. The invite's in the description box below, etc. Tag me in the Discord. Use the @ BeachBum Trading. Also, you can see our ID is 7313 pound 7313. We've had some imposters. If somebody DMs you about some make money scheme, buy crypto, blah, you should already know that's not me. But if it's not pound 7313, that's not me, and it's an imposter. So report them. We'll ban them, etc. So, but tag me in the Discord. You can hit us up in social media, etc. If there's any questions you have, if stocks you want me to look at, etc., I can do as I'm able. So. Okay, so I don't see any. If I missed your question before, please throw it back up in the chat. I've got a couple minutes to answer, but otherwise we can answer more tomorrow as well. So I hope you found this information beneficial. I hope you like this content. If there's any recommendations for improvement, please let us know. Again, post in the Discord, social media, etc. Let us know. How can we make these game plan videos, live streams, etc., other videos more valuable to you? That's our goal. That's why we're doing this, is to help you succeed in your trading. We're thankful to have you here. And again, we want to help you achieve the lifestyle and make money trading as best we're able to help. So, and we hope you'll be thankful to make money trading as well. So, again, tomorrow we'll take all this data, strategies, etc. We'll pick our individual stocks to put on our watch list for Thanksgiving week, November 21st through the 25th. And we'll do further analysis on any stocks, companies, etc., given all this data that we've gathered today and applying the strategies that we've discussed. So come back tomorrow, 10 a.m. Eastern time, and we'll cover part 2, our various stocks, watch lists, etc., for the trading Thanksgiving week, November 21st through the 25th. So you guys have a great day, and hopefully we'll see you all tomorrow. Bye.